Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we give an update of the closing action of the markets. And let's look at how the markets are trading at this point in time. Well, if you see 18,586 is what you can spot on the Nifty index right now. About a 30-40 points jump is what we are able to see. And all this move has just come in the last half an hour of trade. Throughout the trading session, we've been largely flat with a negative bias. But all that green tick you've been able to see just in the last half an hour odd. 18,600 now on the Nifty, 45 points up in trade. Sensex also hovering about 130 points up in trade, 62,550 odd levels at this point in time. But look at the Nifty Bank. That is what has hit the record levels yet again today. The Nifty Bank is where all the action is. It is hovering at 43,577. A sharp jump of 470 points now at the day's high, up over 1% in trade. And what's clearly contributing to the Nifty Bank move today is, as is always, this PSU Bank Index. We've been seeing last 2 weeks consecutive move on the upside, and that has contributed to the sharp move. The PSU Bank Index, clear winner in today's trading session, 3.8% jump is what you're able to see right there. What has fueled the fire in this space is, again, after Morgan Stanley's report that we saw last week, it's Credit Suisse that's now come out with the report on being bullish on the PSU banks as well. We'll get into the details a little later as well. But apart from the major index, we also see the mid caps and the small caps moving up in trade. From the last two odd trading sessions, we've been seeing higher participation from the broader markets also. When you see the other sectors today, apart from, say, the IT stocks and the pharma stocks, that's where the major drag is, and the realty space as well. The other sectors are largely in the green. Apart from the banks, you have the autos that are moving up. The FMCG stocks are flattish to a positive in today's trading session. Financial services up 0.5% in trade as well. What's not contributing to this up move today is clearly the Pharma index that's down by 1%. The major contributor to that one is Sun Pharma on the downside. It's the major loser on the Nifty index as well. IT stocks down by 0.25% in today's trade, and the realty stocks that have been sulking right after that repo rate hike that we saw from the RBI right yesterday. When we look at the top gainers and the top losers list, first up, the top gainers, Axis Bank, IndusInd Bank, those are the banking counters that are moving the most as far as the Nifty index is concerned, up by almost 2% each. Eicher Motors, L&T, Hindalco, the other movers in the top 5 as far as the Nifty gainers are concerned. On the losing side, like I pointed out, it's Sun Pharma that's been a big drag today, down about 3% and the key reason for that is that the US FDA has now placed Sun Pharma's Halol facility under import alert, and that's the big negative that has caused this kind of a decline on Sun Pharma. The shares have slipped over 3%. Apart from this, you do have names like TCS, Kotak Mahindra Bank, HDFC Life also down by almost 1% with huge volumes in today's trading session. So keep an eye out on these names as well. So some of those finance names right there, Bajaj Finance, the big heavyweight, down by 0.5% odd in today's trading session as well. But it has also been a very important day from the political economy point of view as well. We've seen these three-way results this whole week. What we have after the Aam Aadmi Party's victory in MCD elections in Delhi. Today, the dust has settled in Gujarat. We've seen that the BJP is now on course to register a record win in Gujarat Assembly elections, while Congress seems to be a favorite to form the government in Himachal Pradesh as per trends as well. But how do you really interpret these results as an investor, and what could this really mean for the economy as a whole as well going forward is what we will discuss on this show. Joining in on this show, now I have Mr. Siddharth Zarabi, Managing Editor, Business Today TV, and for an editor's take on elections and to help us understand what does it mean for the economy at large. And also we'll be joined a little later with the market expert Avinash Kurakshakar as well. But first to you, Siddharth, I want to understand from you, how do you really decode these results as far as the political economy point of view is concerned? Especially I want to come on to the Congress victory in Himachal Pradesh and their promise of returning the old pension scheme. That has seemed to work for them for sure.
Absolutely.
But as an economy point of view, what do you really make of this?
Well, it's clear. The election results, one municipality and 2 states, including a major state like Gujarat, have delivered three-way results. The BJP has come back to power in Gujarat. The Congress is returning to power after a 5-year gap in Himachal Pradesh, and the Aam Aadmi Party has won the municipality, and therefore the city government has gotten a bit more to do. But the larger implications are very clear. A key promise in Paul-bound Himachal, which is being credited with having swung several of the seats in favor of the Congress, is the promise to return to the old pension scheme. Now, the old pension scheme promise is not unique in the recent context. It is not confined to Himachal. We must remind our viewers that Punjab has already notified it in November, although it's not been implemented. So that's a bit of a strange thing. The Aam Aadmi Party used this in Himachal Pradesh. Congress ruled Rajasthan and Chhattisgarh have already gone back to the old pension scheme, and even the Jharkhand Mukti Morcha ruled Jharkhand has also taken the OPS back. The key thing here, Sakshi, that we need to tell our viewers is that this could well become the biggest revdi in the run-up to the 2024 Lok Sabha elections. And why do I say this? The example of Himachal is very, very important. Himachal is a state where employees, government employees, have a very significant and perhaps disproportionately higher say in the local election outcome in the state. And that's why this demand, if it spreads across, could have ramifications. And before I hand it back to you, Sakshi, just one more point. A month or so ago, the central government employees, one of the federations, has formally demanded the return to the old pension scheme, and that scheme was done away with on the 1st of April 2004. 18 years later, it could well come back to haunt us in the run-up to the general election.
Absolutely. I was coming to that because I want to understand what about the markets? Will they sooner or later get worried on the fiscal profligacy now?
That's a very good question, and remember, we are discussing this almost 30 hours after the latest monetary policy action, which saw yet another hike. There's a view that many market participants are taking that 2 more hikes are likely by June next year. What does that mean? Money becomes costlier. As money becomes costlier, there is bound to be a slowdown in economic growth. The RBI has reduced it by a marginal number. Private pollsters have reduced it even further. Now, why am I saying this? At a time when global growth is slowing, there is a lot of uncertainty with regard to Indian exports. The good headline in some ways, which is in fact a headline right now, is that crude oil is below 80, and whenever crude is below 80 or above 100, it's bound to have an impact on India. Therefore, in the run-up to the 2024 election, several opposition, AAP, Congress, Jharkhand Mukti Morcha, and who knows what may happen in the south of India. Already 15 states are non-BJP ruled states. Sakshi, we should not forget this. Now imagine where everyone is trying to get back a larger share in the Lok Sabha, including a Congress party which has been decimated in Gujarat. Could it become that big political demand in the run-up to 2024? And each election pivots on 1 or 2 such demands. In the recent years, we have seen the culture of revdis, as the Prime Minister put, take front and center stage. So therefore, I believe there is some amount of worry with regard to fiscal profligacy being the greatest electoral tool in the hands of a desperate opposition.
Absolutely. Just take that point a little forward to understand, what could exactly happen, if more and more states implement this in the run-up to the general elections. How could it turn out to be a fiscal disaster like
the numbers have to be done. Rajasthan, for example, the number of employees that has now been covered is just around 3,500. Remember, 18 years means that people who retired at the age of 60, and if they have become eligible, they are already at the age of 78. Mortality kicks in when you discuss pension. So the numbers will have to be really projected by someone. I don't have a handle of what this could mean on a national basis, although the CAG has very clearly warned recently that the pension liability exceeds by almost 37% the salary and wage bill of 3 states and the center. So those numbers are well known. That is why we had moved back to the had done away with the old pension scheme. From a market point of view, a very quick point I want to make. Remember the time when the BJP and it was a shock defeat in 2004, lost power at the center. That was a black day for the markets after one of the constituent parties for the UPA said the markets, he basically said that we don't care about the markets, and the markets tanked.
Yeah.
If you look at the trajectory of markets since 2014, the Lok Sabha election has been a key driver because the policy agenda for the next 5 years is very clear. And while we haven't seen what poll promises will be made for the Lok Sabha election,
Yes.
we are still a year and a half away. It's very clear to me that the signals, political signals from the ground say that fiscal pressure could be building up.
Yeah.
Punjab is a classic example. This was a key demand. Punjab has notified it but has not yet implemented it, which means they are struggling to find the finances, and Punjab is already a fiscally broken state. I don't need to go into that. The pressure will build up in the south of India also, which has been always a key region which comes up with populist measures. So
Right.
we'll have to wait.
Just last point, Siddharth. I think you were mentioning off-air to me about the central government employees also making a demand for the return of old pension scheme. How could that then, impact this overall populist move that the states may be moving forward?
Before someone says that I'm only hitting out at the opposition, no, I'm just trying to present different facets. Now, let's also acknowledge that in the run-up to the 2014 election, the BJP, and Prime Minister Narendra Modi had also spoken about a better pension deal for military, army, defense, navy, air force veterans. That was implemented, remember, and that came at a significant cost, although there was some amount of dissatisfaction in the ex-servicemen community. They wanted much more. So, pensions as a tool for political results have been utilized across the board. Let me make that clear. I'm not saying that the BJP is standing out alone. In the current context, the BJP did not. And I think to Himachal Pradesh BJP, the Chief Minister Jairam Thakur, to his credit, he had refused to bow down to this demand when it was put in the poll mix 2 months back. I would say that we will come under severe fiscal strain on account of a return to the old pension scheme. Yes, there is old age security that is required. Yes, government servants on an average sometimes are paid lesser than in the private sector. The private sector mostly does not have a pension scheme. You need to address old age security through different measures rather than bankrupting the center and the states in India.
Absolutely. Point taken. Thank you so much, Siddharth, for sharing all these insights about, how does one really extrapolate this victory of Congress and what could it really mean as far as the old pension scheme return is concerned, and how could perhaps we see more and more states contemplating on bringing this back, and what could this ultimately mean for the economy at large as well. Let's now move ahead and welcome our guest, market guest for the day. Avinash Kurakshakar joins in. He is the Director of Research at Profit Mart Securities to help us understand what to make of the move on the markets post the election results and the verdict that we have been getting. Welcome, Avinash, and thank you so much for taking the time out for this discussion. First question to you. You've heard the discussion that we had. How do you really decipher the results that we've so far got? And in terms of what Siddharth was really pointing out as to, the return of old pension scheme, and how could that really have an impact at large over the overall in the economy? And how will markets therefore really understand all of this and read between the lines then?
Yeah, I think, Sakshi, thank you for inviting me. And first of all, the results which have come out from the Gujarat state election are definitely much better than the street expectations. I think the markets were expecting anything above 120 to 130 seats. I think above 150 seats is definitely a very good indication. My sense is I think the markets were expecting a victory, but the margin of victory, Sakshi, is much better than expectations. And that could possibly lead to some sort of rally. As far as the pension scheme is concerned, I would believe that this time the government has got decent flexibility. I think direct tax collections have been quite robust, but I think it needs to be understood as to how this scheme is going to be implemented, because clearly I think just before the election, it could be a kind of a election kind of gift to the to the government employees. But what impact it creates on the fiscal situation is something which is very important. My sense is that if it does happen, the markets would obviously look at it very cautiously, because such kind of election gimmicks, don't sustain for a long time. And I
Yeah.
think obviously that would have an impact on the overall GDP as well as on the fiscal deficit number. So I think it's better, one needs to wait and watch before the finer details are announced. But
Sure.
net, I think it should happen, but it should happen in a more constructive manner.
Okay. From the macro point of view also, this week we've seen a lot happening. We've seen the RBI policy that's been digested by the markets. The US Fed, we are awaiting next week. Oil prices are at their lowest in 2022. How are these indicators really looking from the market standpoint?
Yeah, I think first of all, as far as the crude oil prices are concerned, it's good news for India because lower crude prices mean inflation obviously will get impacted a little slowly. And most importantly, our trade deficit and forex reserves would obviously not be that badly impacted. So that is point number one. Whenever crude goes down, markets react positively. The RBI policies actually has been more or less hawkish. I think people are expecting some dovish comments from the governor, but I think he still continues to maintain inflation at higher levels. And obviously, for the next couple of months, crude prices, global headwinds would be monitored. But I think one point which was clearly reflective was that despite crude prices touching new lows, they have assumed an average oil price of $100 per barrel, which looks to be very conservative. So the governor seems to be
Hmm.
in a mood of being ultra cautious, and I think he probably wants to surprise the markets with some good news once numbers actually come up to his expectations. So net, I think nothing great in the policy as
Hmm.
per expectations, but I think it's going to obviously mean a little bit pain for the real estate players, especially for home loan buyers, because EMIs are now going to be pretty more expensive with the second rate
Hmm.
hike.
Yes, absolutely. But the Nifty Bank is at a record level yet again. We are seeing the PSU banks shine bright after Morgan Stanley. Now, Credit Suisse has come out with a bullish report on the PSU banks. Amid all this uncertainty, we have the political, the macroeconomy uncertainty and recession fears and inflation trajectory still to monitor. But amid all of this, do you believe that Nifty Bank and PSU Bank is the space to be in case you still want to be in the positive side as far as the market returns are concerned?
Yeah, I think as far as the PSU banks are concerned, Sakshi, this was one space which was completely underpenetrated by the domestic funds and by the FIs. I think they were completely ignored. So it was a underpenetrated space. So obviously, a lot of action has been seen in the PSU banks in the last couple of months. What
Mm,
is interesting is that credit growth is very robust, and I think corporate capex in the next couple of years is going to be touching record highs, and that is what is driving the markets positively. A
mm,
stronger capex would mean that these banks would have ready customers from the corporates and the retail buyers. So I think the story would continue, and my sense is that we could see at least sustainable levels of credit growth of 14-15%. So the PSU pack, especially the larger banks, could do well. My
mm.
sense is asset quality levels are now at record low levels. The banks have trimmed their balance sheets. Obviously they are now fit and fine. So obviously one can look at these stocks, from a longer term view. I think some more time this current rally could definitely sustain.
All right. But you mentioned about the rate hikes and how that is being seen as a drubbing on the royalty stocks today from yesterday as well, carried forward. Your thoughts on the royalty space? How does one really approach this space right now?
Yeah, I think from a short-term perspective, definitely, real estate, obviously buyers, home loan buyers could find their EMIs going up, and
Yeah.
for new loans also there could be some sort of a demand compression. But the longer-term picture looks to be quite strong. In fact, we have been talking to many builders, especially from North India, from Mumbai. Most of them are very positive on the inventory sale, and clearly, as of now, the interest rate hike has not actually impacted demand so badly. So
Mm,
typically, I think builders are very conscious of putting up new inventory, new projects. So I think I would not be surprised that even after one or two, interest rate hikes, the sentiment remains to be really positive. And I say specific pockets, within the real estate, market continue to be quite buoyant. So it's going to be selective, Sakshi. It may not happen that every real estate company could make a decent amount of money, but
yeah.
North India as well as Central India and the Mumbai market would continue to do well.
Right. Which sectors other than these two that we have discussed look promising to you right now where you believe that, momentum could build forward from here?
Sakshi, I think after PSU banks and the rail infra stocks, I think cement is one sector where we are very positive. In fact, we've been talking to many cement companies, and the kind of commentary which has come in is quite promising. On one side, the petcoke cost, the power costs have come down. Most importantly, volume growth is going to be at least in 9 to 10% for most of the large cement majors, and prices have gone up. So I mean, I would not be surprised that now cement could be one area which could possibly get a kind of a strong kind of re-rating just ahead of the budget. If capital goods, infrastructure, and manufacturing is given impetus in the coming budget, then cement cannot be ignored. So I think you'll have to look at cement stocks from a
Okay.
fresh perspective, because the first half was really bad.
Okay, and what about the metals pack? How are you reading signals into that? You know, on the one side, we do have news flows from China that they have now reduced their restrictions of lockdown as far as COVID is concerned. Do you think there could be now fight for the flows as far as FPIs are concerned, and therefore the metals pack could be in for some uncertain moves?
Yeah, I think if China removes the restriction and enters the metal market in a big way, then hopefully, Sakshi, January could be a month to watch out for, because clearly China is one of the countries which actually decides the metal price. And obviously, for a long time, they've been out of the market. So I think clearly, integrated steel players like, say, Tata Steel or Hindalco or JSW Steel could possibly come into the limelight, because these stocks have been beaten down from their highs. Metal prices, if they rise
Okay.
once China enters the market, could obviously flow into the EBITDA margins.
All right. Avinash, please stay on with us. I'm now joined by Tanya Aneja, my colleague, who has a list of the stocks that have been buzzing in trade today and the news flow impact as well. Tanya, take it away.
Absolutely, Sakshi. Let's start with the top gainer first, and that is Axis Bank. So, shares of Axis Bank were up nearly 3% today and also hit an all time high of 923.7 rupees on the Bombay Stock Exchange after the bank announced that it plans to raise up to 12,000 crore rupees through bonds. Now, also, credit rating agency ICRA Limited has also assigned AAA rating to infrastructure bonds and debentures and reaffirmed ratings of other debt instruments of the bank. Shares of L&T were also in focus. They were up again today. In fact, the stock hits its all-time high, and the market cap also crossed 3 lakh crore rupees important mark. So the company has announced that its construction arm has secured mega orders for its minerals and metals business. So as per the classification, the value of this mega project is above 7,000 crore rupees. PSU banks are also on a roll. Bank of India, Bank of Baroda, Central Bank, PNB, they were all up to the tune of 3 to 6% today. And Nifty Bank Index also hit its all-time high, and it is up actually over 73% on a Y-to-date basis. That is year-to-date basis. And then on the flip side, we have shares of Triveni Engineering. So they were down to the tune of 6% today after multiple block deals. So while the buyers and sellers were not known, it was earlier reported that promoter Dhruv Sani was likely to sell a 7% stake, and the total promoter holding in the company stood at 68.2% for the quarter ended September 2022. Lastly, we have Sun Pharma. The stock is also in the focus today, and it was in fact the top loser on the Bombay Stock Exchange. So the US health regulator, US FDA, has listed its halal facility in Gujarat under import alert. So the import alert means that all future shipments of products manufactured at this facility are subject to refusal of admission to the US market until the facility becomes compliant with current good manufacturing practice standards. Back to you.
Thanks a lot, Tanya, for sharing all this update. Avinash, to you on the pharma major, Sun Pharma, and the pharma space as well. Your take?
Yeah, I think Sun Pharma saw a major correction, because after a very long time, some unexpected negative surprise for their Halol facility came in. One thing is very clear: most of the analysts have not factored any revenue or profit estimates from this facility, and the clear focus for Sun Pharma has been on the specialty side of the business. So I think probably for a few days the stock could remain under pressure, but thereafter I think some value buying would emerge. So I think there's nothing to
Sure.
panic about. But yes, these kind of unexpected FDA announcements could obviously upset the mood in the very near term.
Okay, but overall for the markets also, Avinash, we've been confined to a tight range in the last 4, 5 odd sessions. What is the sense that you're getting given the direction we are likely to see? Are we going to come out of this range soon, or is it going to take some time?
I think, Sakshi, the mood will definitely be positive, but I think for the Nifty to actually cross 19,000 would take a lot of time.
Okay.
There has been a lot of resistance around 18,600 odd level. So I think markets would struggle. And I think probably, from the mid January, probably you could see some sort of pre-budget rally. But I think clearly the near-term trigger would be the budget. Till that time, I think the markets would remain in a very closed zone. And I think you'll probably see a lot of stock-specific activity rather than the index movement, getting more volatile in the very near term.
So we are not in for any Santa rally that we've been like looking forward to.
Well, I think some amount of profit bookings actually would also come in, because you must understand that Gujarat elections were more or less discounted. Everybody was expecting a BJP win. It's only the margin of victory, and I think after that it's back to business. So I don't think this is going to be a factor which is going to drive the markets crazily. I think probably markets would rise, but definitely at a normal kind of a momentum pace.
Okay, understood that. Well, thank you so much, Avinash, for being with us and sharing all these insights about markets and specific sectors and stocks that we spoke about as well. Let's now look at the closing action. How are we going to be closing today's trading session? It's up for the markets, perhaps, snapping the 4-day loss that we have been seeing over the last 4 sessions, 177 points up for the Sensex, 62,588, 18,616 for the Nifty at this point, about 58 points of a jump. But near the day's high is what you're able to see the markets really trading at. After a very, very choppy session through the day, we're finally looking for a green close, and that could come as a big positive for all the investors who've been looking at this slow moving and a range bound move over the last 4 odd trading sessions as well. Let's also take a look at how the sectors, various sectors are moving in the markets as well. As far as the broader markets are concerned, we do have the mid-cap and the small-cap indices up in the green. The mid-cap's really shining away. 0.6% of a move is on the upside is what we've seen. Nifty Mid-Cap 100 Index at 32,515, up 200 points as well. So that's the one that has really outperformed the benchmarks in today's trading session. Small caps slightly up in trade, just in tandem with the benchmarks perhaps. About a 0.25% up move is what you're able to see. But on the weekly F&O expiry, the India VIX levels are down by 5.5%. So keep an eye out on that, 13.2 right there. So markets comfortably looking at a move on the positive side and less worried about the volatile moves. The market breadth seems largely still divided, although tilted towards the bulls today. 28 stocks of the Nifty 50 in the green, whereas 22 stocks on the declining side as well. The top gainers, just like how Tanya also pointed out, banking stocks are taking the cake today. I mean, like Axis Bank, IndusInd Bank up 2% odd, L&T at record levels, Eicher Motors, Hindalco. Those are the stocks that are moving up in trade today. Sun Pharma dragging, Power Grid, NTPC. So some of these power majors are dragging today. HDFC Life, Bajaj Finserv. So apart from Sun Pharma, you have Divis Laboratories also that's down in trade today. So some here and there, life insurance major, HDFC Life also down in trade. IT stocks, HCL Tech is down, Wipro is down in trade, TCS perhaps as well. So all these losses coming in from L&T Tech also, TCS, Coforge, all of these stocks are down in trade. So IT majors, the pharma majors, they are dragging the street in today's trading action as well. And just as we close, I think that is the closing level for the day. Sensex at 62,570, up 160 points in today's trading action. That's the closing level for the Sensex in today's trading action. And there you can see it on your screen. We are up 0.25% for the day. Snapped that loss of 4 days and definitely moving forward towards the close of this week as well. We're ending with positive, but we'll have to see whether week on week we end on the positive. All depends on Friday's trading session as well. Nifty 50 up by 50 odd points at 18,609 in today's trading session as well. So the PSU banks continue to run up high. We'll keep an eye out on how the markets really move forward from here in tomorrow's trading session as well. And with that, we wrap up this edition. Many thanks for tuning in for now, but do stay tuned on to Business Today TV. Don't forget to subscribe to this channel, and you can also engage with us constantly on our other social media platforms. That's Twitter, Facebook, LinkedIn, and Instagram. Many thanks for tuning in for now.